Hello everyone, welcome to the ninth lecture of our most important topics discussion series. These are the sure short topics for your May 2025 exam cycle for the RBWM paper. Today we'll be discussing the remittance products. All of these topics are very important. If you haven't yet watched the previous topics, the previous videos, make sure that you watch them, you understand them, because these topics have been asked by the institute many times and are the most probable ones, and they will help you score more marks in your exams. Also, don't forget to like the video, share the video, and subscribe to the channel so that you do not miss any of these particular sessions. Now, when we talk about the remittance products, earlier the traditional remittance products in our nation were the paper based instruments, the bank check, and the demand draft. Remittance now they have been replaced by the electronic transfer of remittances not only across the country but also across the globe. So, the developments like NEFT and RTGS. RBI has, other than this, also taken many initiatives towards introducing and upgrading the efficient payment systems in the country. So we have the electronic payment systems now, which are taking place of the physical offline remittance products. First, we will start with NEFT, which is the National Electronics Fund Transfer. All right. So NEFT, it is a nationwide payment system facilitating one-to-one funds transfer. What is the object of NEFT system? To establish an electronic funds transfer to facilitate efficient, secure, and reliable fund transfer and clearing system, and to relieve the stress on the existing paper-based fund transfer. All right, so under this scheme, the individuals, firms, corporate, they can electronically transfer funds from any bank branch to any individual or any corporate having an account with any other bank branch. There's no restriction on the bank branches that we can transfer funds to only the similar bank having the same account in the same bank branch is not necessary. Now, the NEFT operates on a deferred net settlement basis. This means that in batches, the settlements take place. In batches, the settlements take place. So, if the institute asks you what is the meaning of DNS, don't get confused there. Simply, it settles transactions in batches, and this is the meaning, right? And for being part of the NEFT fund transfer, the bank branch has to be NEFT enabled. The individuals, firms, they should be maintaining accounts with a NEFT enabled bank branch. Even those individuals who do not have a, let's say, bank account, these are the walk-in customers, they can also deposit cash at the NEFT enabled branches. But these remittances have a restriction of maximum 50,000 rupees per transaction. So for walk-in customers also NEFT facility is there, but for maximum of 50,000 rupees. Again, they have to furnish all the details like the complete address, telephone number, etc. All right. And both NEFT and RTGS, the remittance is being transmitted through the SFMS, the Structured Financial Messaging System, right? One-way cross-border transfer of funds from India to Nepal is also facilitated through the NEFT. This is the Indo-Nepal Remittance Facility Scheme. Again, the transaction is limited to below 50,000 rupees. Then earlier there were many charges like the inward charges, outward charges which were applicable to the remitter or inward transaction at the destination bank branches. However, with effect from 1st January 2020, all the applicable charges on the NEFT transactions that are initiated online have been removed. So, online transactions via internet, mobile banking portals by the savings account holders, these charges have been removed from RBI with effect from 2020. So this is an important step. Other than that, earlier the fixed timings during which NEFT transactions could be processed, it was only between 8 to 6:30 p.m. from Monday to Friday and 8 to 12 from Saturdays. However, again, online NEFT transactions now can be performed 24/7, 365 days. These restrictions have been removed by RBI. And when we talk about the batches, so there are 48 batches that are half hourly every day where the transactions takes place. So these are some important points about NEFT. All right. Now, if we talk about the process flow, so the parties to a fund transfer, there are five parties. We have the sending bank, the sending service center, NEFT clearing center, the receiving service center, and the beneficiary branch. How the operations work: the individual can transfer funds through NEFT, they will fill an application form or do the work online. Some banks offer NEFT facility even through the ATMs. Walk-in customers also there. Next step, the originating bank branch will prepare a message and send it to the pooling center. The pooling center will forward it to the NEFT clearing center. Then the clearing center will sort the fund transfer transactions destination bank wise. Destination bank wise. And then once the sorting is done, then the message will be forwarded. They are forwarded to the destination banks through their pooling centers. And then the destination banks will receive the inward remittance messages and pass on to the credit to the beneficiary customers' accounts. This is how the NEFT works. All right. Next, we have the RTGS, the real time gross settlement. Real time means that the processing of instructions at the time they are received. In NEFT, in batches, the transactions are completed, but in RTGS, gross settlement means the settlement of funds instructions carried out individually. And because they are happening instantly, so payments are final and irrevocable, right? We have hybrid features, future value added transaction features, centralized AML filtering. All of these features are there. All right. So it is a remittance product which has global practice, and RTGS has replaced the high value clearing across all centers in India. What is the process flow of RTGS? The transactions that are carried out, the remittance and funds transferred will be transmitted through a series of process input and travel from the customer end to the beneficiary end. All right. Another important point: the minimum amount to be remitted through the RTGS is 2 lakhs. There's no minimum in the NEFT, but for the RTGS, the minimum amount of fund transfer should be at least rupees 2 lakhs. And there is no upper ceiling for the RTGS transactions. All right, this is another very important point. Now, if we talk about the process flow, the transactions carried out by RTGS can be interbank transactions, customer payment transactions, and delivery versus payment. Very important. What is the meaning of interbank transactions? They are used to settle the participant bank's financial obligations on their own account. The participant bank's own account, right? Then in customer payment transaction, customer information along with the payment message can be transferred, and delivery versus payment transaction will arise out of the RBI's security settlement system. So the institute can ask you, what happens in the interbank transactions? Participant banks' financial obligations, customer payment transactions, customers' information along with payment message, delivery versus payment, RBI's security settlement system. All right. So the request will emanate from the customer to route a remittance through the RTGS. The originating bank would debit the account because it is real time. The message after due authentication would be communicated to the payment gateway. Then through the central hub, the messages will be routed, and the beneficiary bank will then transmit the message to the beneficiary branch for credit of the beneficiary's account. All right, so this is the process flow. Again, earlier there were time varying tariff applied on RTGS, but RBI has now made RTGS services available 24/7, 365 days, and the processing charges that were levied by it for RTGS transactions have also been waived. All right, so this is the meaning and also the difference between RTGS and NEFT. I hope the process flow is clear. All right. Next, we have the ECS, Electronic Clearing Services. It is an electronic mode of payment or receipt of the transactions which are repetitive and periodic in nature. For example, salary payment, interest payment, dividend, pension, or even for bulk collection of amounts towards the telephone, electricity, or water dues, cess or tax collection, loan installment. So these are that type of transactions which are repetitive. Every month, these transactions will be done. So for automating these transactions, the ECS has been introduced. And the ECS transactions are processed under the NACH, National Automated Clearing House, which is operated by the National Payments Corporation of India, NPCI. Right? So similarly, the user will submit the details of the beneficiaries, and the process of automating can be done. So there are two variants of the ECS. We have the ECS credit and the ECS debit. ECS credit will be used by an institution for affording credit to a large number of beneficiaries. For example, salary, dividend, interest, and payment. So the ECS user has to register itself with the clearing center, and the payments can be put through by the ECS user only through her or his bank. Now, this bank will be known as the sponsor bank, and the beneficiary account holder to which the amount is to be remitted is known as the destination account holder, and the bank is known as the destination bank. And obviously, the beneficiary account holder are required to give mandates to the user institutions to enable them to afford the credit, which is done periodically or every month. All right. So I hope the process is clear. The user will submit the details of the beneficiaries, the date on which the credit is to be afforded, the amount which is to be afforded. Then the debit and the credit is done accordingly. This is the ECS credit. Then ECS debit can be used by the institution for raising debits to a large number of accounts maintained by the branches. For example, payment of telephone bills, water bills, cess or tax collections, loan installment repayment, insurance premium, postpaid telephone bills. These are periodic or repetitive in nature. Again, the ECS debit user will submit the details of the customer, the name, bank, branch, account number, the date on which the customer's account is to be debited, and the amount as well. All right. Again, the mandate is to be created in ECS debit, and the process will then be successful. For this, obviously, the customer should have the amount in their bank account for the periodic debits. There are also categories of ECS. Now, this was an issue because of which the ECS has now been or in the process of replacement. There was local ECS, regional ECS, and the national ECS based on the geographical location of the branches covered. Local ECS is operating at 81 centers or locations across the country. At each of the center, the branch coverage is restricted to the geographical coverage of the clearinghouse, which generally covers one city or satellite towns. These are operated either by RBI or through their agents, designated banks. Regional ECS is in 9 centers. It facilitates the core banking enabled branches in a state or a group of states. So the geographical coverage is large, and these are operated by RBI. Local ECS operated either by RBI or designated banks. RECS and NECS always operated by RBI. And NECS national is the centralized version, and scheme is operated at Mumbai. Facilitates the coverage of all the core banking enabled branches anywhere in the country, and it is operated by RBI. All right. Now there were certain disadvantages, like the account holder or the customer, they had to decide whether they have to settle their remittances or transactions through the local or the regional or the national ECS. This problem has been solved. How? By the NACH, which is a centralized system. It is the centralized system, right? So NPCI has implemented the NACH for the banks, financial institutions, corporate and governments for facilitating interbank high volume electronic transactions which are repetitive and periodic in nature, right? For the bulk transactions of subsidies, dividends, interest, everything. So it is a centralized system, and it is launched to with an aim to consolidate the multiple ECS systems running across the country to remove the local barriers. So irrespective of the location of the bank branch, the NACH will work, right? So it supports the financial inclusion measures, facilitates the member banks to design their own products. Online dispute management system is also there under the NACH. So there's the refined mandate management system and the online dispute management system. Also, there is the Aadhaar Payment Bridge System APB, which helps the government and their agencies in making the DBT transfer, the direct benefit transfer. NACH, which was initially available only on the bank working days, now it is available 24/7 on all days of the week. Right? So there is no need for a manual process, easier and faster. There's no dependence on checks or clearance. Banks also get the benefit. They do not need to rely on checks or paperwork. Manual processes are not involved. There are fewer errors. So we can compare the ECS and NACH. NACH is much faster. It is well defined. It has a dispute management system and mandate management system, which was absent in ECS. All right. So this is important. Then we have the Aadhaar enabled payment system, the AEPS. It is a bank led model which allows online interoperable financial transactions at the point of sale terminal through the business correspondent or bank mitra. So this is for financial inclusion. Financial inclusion, right? So that individual can make remittances, they can withdraw cash, deposit cash, balance inquiry, Aadhaar to Aadhaar fund transfer, also generate statement using their Aadhaar card. This needs a KYC compliant bank account in which the Aadhaar has linked, and it allows online interoperable financial inclusion transactions at the POS using Aadhaar authentication. So this is also an important initiative towards financial inclusion in the nation. Finally, we have the Bharat Bill Payment System. The objective is to implement an integrated bill payment system in the country, which will offer interoperable and accessible bill payment services through to the customers through a network of agents. Right? It is a system where RBI has conceptualized, and it is driven by the NPCI. So one-stop payment platform for all the bills, providing the interoperable, accessible anytime, anywhere. So the customers, they can pay their bills anytime, anywhere using their mobile banking, internet banking, point of sale, terminal, mobile wallets, or even through the business correspondents and agents, right? These are all the payment channels. Key participants are the Bharat Bill Payment Central Unit, the NPCI. They have been authorized by RBI and they're responsible for setting the business standards, rules, procedures, and the requirements for all the participants. All right. So the BBPOU and BBPCU, they have been given responsibilities by RBI. It can be a bank or it can be a non-bank. They can choose to integrate either with the customers. They will be known as the COU, Customer OU, Operating Unit, or with the billers, so they will be known as the Biller Operating Unit, or if they want, they can participate with both. They will be integrated both with customers as well as the billers. These are the agent institutions. Now, the biller or the utility company, electricity bill, telecom, DTH, gas, water, even insurance premium, mutual funds, school fees, credit cards, they may be covered under the Bharat bill payment. Right? So the eligible entities who wish to offer these services who are currently in the bill payment, collection and aggregation, they can receive authorization from RBI and work as the agents. Agents, again, they can be the agent outlets, business correspondent, bank branches, collection centers, and the retail outlets. And the biller company. So if I want to pay my DTH bill or my electricity bill, I can simply go on the BBPS, select the biller company, the biller utility. They will generate the bill that I'm required to pay and I can pay it. Now, necessarily, I need not go to the biller, to the utility company. I will simply using my internet banking, mobile, even through the bank branch and business correspondent, I can make the bill payment. This is the advantage and facility offered by the BBPS. And these are the category of billers in the Bharat Bill Pay: electricity, telecom, DTH, gas, and water. RBI had stipulated that over the period of time, other categories like insurance premium, mutual funds, school fees, etc., may be covered under the Bharat Bill Pay. And that is all from this unit. We have completed all the important remittance products. How do they work? The particulars that are the highlighted point. These are important for your examination. Directly questions can be and will be asked. So don't skip any of these topics. Make sure that when you're revising, revise these topics thoroughly. That is all from my side. If you found the video helpful, make sure that you like it, share it with your fellow aspirants, and don't forget to subscribe to the Oliveboard channel because here you will get all the important updates. Your exams are very close now, so make sure that you are giving 100% towards your preparation. Join me in the classes, and I assure you 100% success. Comment down below if you have any doubts or queries. I will see you again in the next session. Thank you and all the best.